Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap on what was another quiet day in the market. We had those fireworks last Thursday and Friday. We had the big sell-off, the big bounce back, and then the last 2 days. Yesterday we had Veterans Day, so there was an excuse for it. Bond markets were closed. Action is typically light on that holiday. Today we woke up a little bit, but the action wasn't that much better, and sort of the tone you're getting from everybody on the trading floor is be very patient right now, take a short-term approach. There's not a lot of edge in either direction right now. There is some stock-specific action, but overall very tough right now to really have an edge from a swing trading perspective. So take a look at the chart of the spiders. You can get a visual of what we've been seeing. Today we held the 8-day moving average, so obviously from a longer term or even an intermediate term perspective, nothing to cause you any concern, but there are some divergences that are happening. There are some stocks under the surface that are remaining weak, while there are some other sectors that are improving and helping the indices stay higher. So in general, when you see divergences, it's not, I wouldn't go as far as to say it's a red flag, but it's just something to keep you on your toes a little bit. I know a lot of traders are definitely taking a more patient, cautious approach after the big gains of this year so far, some of the good action we've had so far this year. People aren't really willing to put their P&L at risk based on just some very choppy action that we're seeing right now. But real quickly, before Scott gets into his mentoring session on the virtual trading floor for subscribers, I'll go over a few symbols from our recent Off the Charts newsletters that are of note. Their recent action, you'll probably see the updates in the newsletter tonight. We'll give it to you in video form also. LVS was one that we added to the newsletter yesterday. We're going to take a look at the chart. LVS, we talked about this descending channel. You could call it sort of a bull flag from based on this recent move from late August up until basically late October. It hit a peak. It's been in a very tight descending channel since then, but with 3 days up, it's starting to break above that descending channel, and that's the type of calculated pattern we'd love to see. It closed off its highs today, like a lot of stocks that were strong early. Wasn't able to have much follow through the upside, but you draw your lines. You can see we love these descending channel type patterns because they allow you to measure an entry just on a clean break through the upper side of the descending channel. And then you can put your stops at, depending on how tight you want to have your risk parameters and how big you want to have your targets be. You could say put your stop at the previous day's low. You could say put your stop at the 21-day moving average. If you want to give it a little bit more room, you give it to the bottom of the channel. But typically we like to keep a tighter stop loss on these type of positions and look for a move back up towards highs before you hit any sort of resistance. So a good action on the first day from LVS after being listed on the newsletter. NSC, which is a railroad, similar type situation. These transports have held up pretty well. Good sign for the economy overall. But then you look at NSC has been one of the leading railroad stocks, and it hasn't yet broken above this descending channel flag type pattern that we're seeing. But you do love to see a stock gap up, hold the gap, accelerate from the gap, and then put in sort of a consolidation type pattern. That's what we're seeing with NSC. So given a couple more days, I think it could break above this descending trend line here and give you a move back to highs before we reevaluate it based on how it gets affected by that resistance at previous highs. ORCL, another one that's been on off the charts. Great action today. It broke above. Yesterday it tried to really accelerate above this pivot, closed off its highs, closed around the flat line, but today opened higher and then accelerated. Like a lot of stocks, like I mentioned before, closed off its highs a little bit, but a really constructive action there. We can zoom out to get a more of a look about resistance that's in place and where ORCL could go. First, you have this pivot here. Pivot high is 35.32, and then you have the 52-week highs, which are up here at 36.43. So some clear levels to watch on ORCL, but good, nice action today to break above this intermediate term pattern that we listed on off the charts. And a couple short setups from off the charts. We talked about the choppiness of this market. There's definitely two-way action going on right now, which is not something that traders hate to see. They like to be able to balance long positions with short positions every once in a while, but you give what the market you take what the market gives you, rather. And Facebook is one that with all this hoopla surrounding social media, obviously the Twitter IPO last week, you've seen some weakening in some other social media names, and you've seen some weakening in Twitter in the days subsequent to its IPO. And Facebook's one that we highlighted this head and shoulders pattern. You see the left shoulder here, the head, the right shoulder. It broke below that neckline with yesterday's down move, but today it found its footing a little bit. What you got to be wary of a little bit with these patterns is sometimes a head and shoulders pattern can be very obvious. A lot of people are watching it. So what they can do is they can break you below the neckline and then rip it back above and trigger a little bit of a short squeeze. So what you got to do is you got to see what type of levels hold on the short setup for Facebook. So today, Facebook looked like it could do that type of scenario where it rips back in everyone's face that's short based on the head and shoulders pattern, but you did see it find some resistance at that neckline that was previously broken. So that's constructive from if you're on the short side of this trade. So it'll be interesting to see what happens with Facebook over the next few days to see if it gets any more downside follow through. But in this type of resilient market, you can't really be greedy with shorts, so we'll evaluate this trade as we go. And then Caterpillar. Caterpillar is one that really looks juicy to me from the short side. You had that run up, I believe, in the earnings, and you had the gap down, and it hasn't been able to reclaim any of that big gap that we saw. You've seen a really tight flag form. You zoom out even on the weekly chart, and you can get an even better look at the pattern here on Caterpillar. And you sort of see another head and shoulders type pattern. You see the left shoulder here, the head, and the right shoulder. Let me zoom out to the monthly chart to see. And you sort of have a double top in place too on a monthly basis, on a longer term basis. So what we like to do with trade ideas, we like to see them align on multiple time frames. This is one that on the monthly chart it's looking bearish. On the weekly chart that we just looked at it's looking bearish. Then on the daily chart you can see major support level here. We'll draw the line. It's sort of just been trading in a range recently, but this is a very bearish looking setup to me. Has not been able to break above these pivot areas over the last 6 months or so, and one that I would definitely be watching. It's been listed on off the charts, so it should be on your radar already, but one I would definitely be keeping an eye on. If it breaks below this short-term consolidation, or I guess it's a sort of turning into a long-term consolidation, multi-week consolidation here, I would look to potentially get short that. A couple other things today. We had a few comments from Fed governors about potential QE, when tapering will start, all that type of stuff. The media's obsession with QE tapering continues, but anyways, one of the governors said that he thinks that tapering could start in December. Obviously, last week we had those two strong economic data points. We had the strong GDP number, growth number, and then we had the strong jobs report. And people think, despite the fact that Bernanke is obviously a very dovish chairman, and then he's going to be succeeded most likely by Janet Yellen, another very dovish chairman, they think that given the strength of the recent economic data, it does make sense to start tapering in December after the Fed sort of surprised everyone by not starting the taper in September. So they might get started a little bit earlier than some people anticipated based on recent feedback. Most people were expecting sort of a March 2014 start to QE tapering, but there's some louder voices that could start earlier. But then again, should we believe anything the Fed even says? For so long they talked about tapering in September, and they sort of led us on and led us to believe there was going to be tapering in September. Rates went up for them without them having to even cut QE, and so they decided to hold off on QE tapering. I think some of their credibility has definitely been damaged. They tried to be more forthcoming and more communicative, but I think that experiment has been a failure, and I don't think we can really put a lot of stake in the words of these Fed governors who sort of talk to distort markets and things like that a little bit. But anyways, that's the stuff that's moving the markets right now, so you got to be aware of it. GLD and TLT, the bonds and gold, are two assets that we watch. Take a look at the chart of GLD. In keeping with that talk about QE tapering is negative for gold, so you get a little bit more rhetoric about that. Gold's going to be weak. Then you get TLT. TLT didn't do much today, actually bounced a little bit, but over the last few days you've gotten perhaps some indications that people are expecting a little bit more tapering based on the strong data. So those are a couple things to keep an eye on. And that's about it for the daily recap. I want to keep it short because Scott, like I said, is doing his mentoring session in the VTF for subscribers. Scott does every Tuesday does a Q&A recap, if you're not familiar, of the day. He shares his charts. You can actually watch what he's looking at as he's going through charts for about a 30-45 minute Q&A. So that's for subscribers only. If you're interested in being a part of that, get a 7-day free trial to the VTF. I want to thank you to everyone who joined the VTF last week for the Twitter IPO. And we didn't want you just to join for the Twitter IPO. We wanted you to join to get a feel for everything that T3 Live VTF offers and get a feel for whether that community could add value to your trading or investing activities. And we've had a lot of people stick around and show that they really like the room and it adds a lot of value to what they do. So thank you for giving it a try, and congratulations to those who enjoyed it and are sticking around and getting some benefit from the VTF. But this has been John Darsie, your editor-in-chief, here for the Daily Recap. We'll see you back here tomorrow morning for the morning call.